good things, I would say, happening around this week because it's end of the month, and as you can see, I already painted a picture on my video today. So if you haven't had time to watch my video, go there and have a look on this. Oh, this one here. I not only talk about the market, but as well as, you know, what would be good for you to have a discipline, you know. So I will encourage you guys to have a look on this video after we finish our webinar, because there is a good content, but not only with market. Because just 1 second here before we start actual again. What I've been finding is most of you guys I'm giving like trading content, all right? Giving lots of trading content before, it's good. It is good. It's something, you know, it helps a lot, and I'm really happy that I can be helping you guys through that. But I want to talk a little bit more about the mind game as well. Okay, having exercises. How many of you do exercises here into this room here that we are right now? Just put me, or you know, I do, or something like that, so I can count. If you do, congratulations. Okay, because you are a step ahead of everyone else. Why I say that? Yeah, that's good talk. You know, go to the gym, play some soccer, diving, running, or anything that makes your body move. Okay, that's one of the best things to do when you're out of the screens. Of course, you know, treat yourself as well. Eat well, you know, like, you know, sometimes if you want to go to a nice restaurant, you made good profits for on the trading. So that's me running. You made some good profits on trading. Go ahead and take, you know, and take some of those profits to treat yourself, because when we're only working, not only going to help you. So I like to divide my week, my schedule in 8. Okay. I like to okay, that's me running as well. Anyways, so watch this video. It's pretty cool. Okay, I've talked about that. I don't want to extend myself here right now, but it's a pretty cool line video, and I talk about USD JPY as well. Okay, but congratulations for those. Mental strength goes with physical strength. Correct. That's exactly what I've mentioned. You know, you need your body. I was just talking to my girlfriend today, and she's doing very, very well on the gym. And I'm really happy to her, because I told her, you know, like, it's not only about physical appearance, but as well as see how much your mind gets clear after you do a good workout, or after you feel like, okay, I'm accomplish it. Why? Because there's a lot of hormones that goes through it. All right. So I don't want to get too deeper again, but do exercises, guys. Go to the gym, do a running, do a walking, you know, push your limits, because what the body is capable to do is just incredible. Okay. And treat yourself as well, as I just mentioned. All right. So that's my message for today. Okay, let's jump into the economic calendar without losing any time, as we already did. Let's look at what we have this week. Right. So to yesterday, sorry, not tomorrow. Yesterday we didn't have anything too crazy. Okay, we did had. Wait a minute. Oh, this is not my time zone. Yeah. Okay, that's good. If I change it here. Okay, so yesterday we didn't have much crazy, but today we did had a quite big move on the USD JPY, as we can see on here. All right, let me put in the 1 minute chart, because here it's not too appearance. There we go here. So we did have this move here. That was pretty much made by the Japanese national core CPI year over year. All right, Jen. I've explained it already what year over year Jen means. So if you don't know what that means, I'm just gonna go through again. Year over year means that's on a yearly basis, taking from January 2023 to January 2024. Okay, that's 1 year. And it came higher than expected. So the expected was at 1.9 and it came as 2%. I know that it's only 0.1% above what I expected. And indeed, it did like a quite okay move, to be honest. But after that, oopsie, sorry. After that, we didn't have much. Okay, so we pretty much had a negative 0.13%. And from here to the highs, to the lows, we had like pretty much similar. So it didn't have much impact. Well, although you can see at the exactly time of the news was a pretty high impact. But the main reason why we didn't have a continuation is because it's not that strong and because it's lower than the previous one. Okay, so let me get my pen here just a second. Okay, so that was the consensus, and that was the previous one. Okay, so the previous one, it's bigger than the actual. So if the actual comes much higher than 2.3%, then we could have a more momentum, more volatility onto the market. Okay, so that was pretty much it for today. We did have new home sales as well, declining, lower 19,000 what expected. So that's not good for real estate on US. Okay, anyways, coming back for today, still we're not going to have much things, but for tomorrow, this is Australian time zone, guys, just remember that. But for tomorrow, we're going to have core durable goods orders. We're going to have Elderson speaking from ECB. We're going to have very important here 2 a.m. for me, consumer confidence of February from US. Okay, we're going to have as well the RBNZ interest rate decision, rate statement, monetary policy statement, and the press conference. Okay, so this is going to be the outlook for tomorrow. The standing out point for tomorrow. Those 4 news here, 5, 6, 5. So those 5 here will be the big boys for tomorrow, for Wednesday. My takes are that the monthly CPI indicator for Australian dollar, it's not going to have, of course, much influence, but it's good to see how it's going to react, okay, to the market. Because remember, guys, if it comes much higher than the previous and much higher than the consensus, that is an indicative that inflation haven't been actually reducing in a monthly from January last year to January this year. Okay, but if we see a lower inflation, then what can probably happen is in the next meeting of the RBA, the Reserve Bank of Australia, we have a more passive to dovish encounter with the market. Okay, but we need to see the numbers first. All right, I'm just assuming here. This is no nothing that I think that will actually happen. But anyways, now talking about RBNZ, the interest rate decision, that was very good. That was mostly predicted. You know, another pause, 5.5%, same as the previous. Expecting no changes here. Okay, remember, I've told you and I've showed you guys a let me show you here, RBNZ, another hike. So this guy here, the ANZ, one of the ANZ analysts, the research, was saying that they expect the RBNZ may have another hike. And look at what happened with the Aussie New Zealand once they say that. Okay, let me put in the 4 hours. Here, right? So that pretty much happened on the day that they say that the New Zealand dollar could have another hike on the interest rates. Now, do I think that this is possible? Well, anything is possible in this scenario. Okay, I've read through these. They have a concise. I'm gonna send this link for you guys, so if you want to read, you can. But you know, pretty standard actual article. Anyways, the idea behind why they think that we'll actually have another hike, it is concise, but I don't think it will be possible. Okay, especially with a more neutral RBNZ. But it can happen. We can't rule it out, okay? Because it's such a crazy scenario that we're going through right now. Yes, that may can happen, but in my opinion, most probably not going to happen. The only reason why the Australia is losing strength, Australian dollar is losing strength, I've mentioned already, mostly dovish RBA, as well as weaker sorry, my English, weaker products sending out to the country, exportations and exportations, sorry, weaker exportations than expected. Consumer confidence not that good. Retail sales came a lot lower. CPI coming as expected. So lots of things here not working through the Australian dollar. Okay, even though if we look to the Aussie dollar, we still are on a very good level to continuation to the downtrend. Even I have mentioned on the Telegram, I've posted one of my ideas. Where is it? Here, this one. So I've posted this idea so you guys could see what my take on the CPI. Okay, so on the Australian dollar, the Australian dollar has successfully rebounded from its recent lows of 63.43 following the release of last week's consumer confidence and CPI data. This recovery implies a potential exhaustion in the prevailing trend of a stronger US dollar through this year. In the short term, I anticipate a modest upward bias, bolstered by Chinese authorities closely monitoring stocks and standing ready to intervene, especially with looming Chinese National People Congress scheduled for March 5. Okay, and so in the short term, I do think that we have a modest upward bias, but soon, you know, most probably we may come lower to hit those 64 and 63,500. Okay, so that's not something that this is not something that has to be ruled out as well. So yes, I'm short on Australian dollar, but you know, again, very small position here. Now, there we go. So RBNZ interest rates. The most important as well, it's not the rates at this stage. I've mentioned already what's the most important is the rate statement, the press conference, and the monetary policy statement. Okay, those three here will be the big boys for tomorrow. Then we're gonna have on Thursday the big boy US coming and releasing the GDP data quarter 4. Remember when we had, let me show you guys so I don't miss up the dates. 2023, I think it was maybe maybe October. Let me check. I can't remember when they say that, but you guys probably can remember what, because I say that so many times. The Fed last year, Jerome Powell have been stating that we would have a very strong Q3 and a very weak Q4. Okay, so the news that is coming, it's for Q4. Okay, the previous was 4.9 Q4. So we already expecting 3.3. So that's 1% lower of the previous. Okay, it's 1.3% lower, 1.6% lower of the previous. So this is already very bad in a sense, okay, but the price haven't been priced in, even though if you look to the US dollar, it has been falling, okay, it has been falling from all the way to 105 pretty much to 103,670. Okay, from oopsie, not this. So from all this top here to the bottom right here, okay, we've been falling pretty sharply. Now we've tried to breach the simple moving average on the 200. We couldn't, and now feels like we are getting through these. Okay, I'm going to talk in a second about the US dollar, a very interesting situation there, and very, very, I would say, hard market at this moment, but plenty of opportunity, but just hard to get into it, if you know what I mean. But anyways, so just pay attention on Thursday for the GDP, the gross domestic product, because it will have an impact on the market. And if the Fed have said that they're expecting a weaker growth on Q4 for 2023, they've been telling us many times, I'm not gonna go against them. All right, so that's the thing here. Anyways, so we're gonna have as well some of other news for US, like PC prices, goods, trades balance. This is very important to have a look as well. Price index as well, but primarily the GDP quarter-over-quarter would be the big one. Okay, to have a look on this. Let me see, someone wants to join. Yeah, cool. Okay, we're going to have crude oil investors as usual. We're going to have some speakers from different central banks, ECB and Bank of England. Then we're going to have throughout the day CPIs for France, as well as for Spain, as well as for German, and for what else? I think we had one more. No, that's all. Oh yeah, German here, German, and that would be it for Thursday. So very important data as well for Swiss, right? The GDP for Switzerland year-over-year Q4 and quarter-over-quarter Q4. So if we look at the CHF, we can have a look at USD CHF, has been pretty weak, okay? US dollar is even stronger than the CHF. And I've mentioned about this long trade here on the, what day was it? 8th of February. So if you got it, you could be like 63 pips, but it's not bad, you know. Anyways, we have a question here. If the GDP decreased but the PC increased, would you go long on the dollar? Now, if the GDP decreases and the PC increase, I wouldn't do anything, okay? Because having a thing, the GDP is the gross domestic product, right? They don't have much to do with each other. Well, they do, of course, they do have to do with each other, but in a sense, they both need to be good to actually go long. If one goes one way and the other one goes in another way, then I'm not too keen to trade the dollar, I would be looking to trade other currency instead, like the euro or the pound. Okay, because remember I've mentioned that I was looking to some people dumping bonds from Japan and starting to buy some pound. Well, look at what's just happening with the pound dollar here. You know, it is going up. I'm still holding my position. Remember, 50% off already. Stop loss on break even, but it is going, actually it's going up, right? And I was going to post one of my analysis today for the pound, and unfortunately the website wasn't working. So I would look to trade the pound or the euro. All right, so that would be my my take, I would say, Lucian. Thanks for the question. Now, moving ahead for Friday, I've already mentioned German CPI expected to come at 0.5%. Previous was 0.2%. So pay attention on that. If it actually comes at 0.5%, it is already much higher than the January, but sorry, from February last year. But if it comes 0.5, then it's priced in already. Now, GDP for Canada. We're going to have year over year, quarter over quarter, month over month. Jesus, we're going to have the whole set coming in once. Year over year, quarter over quarter, month over month. We don't have the consensus here, but we have the previous. Not looking too great quarter over quarter. Decent month over month. Not expecting any growth here for month over month of December on GDP. And year over year, we don't have it. Okay. Now, Chicago PMI, very important as well. What else? Manufacturing PMI for China, definitely important. Okay, definitely important. So pay lots of attention on that, not only for China, but as well for other currencies like Australian dollar. Okay. Now, what else we have? Oh, CPI for Europe, 100% pay attention on that. We have a 2.5% consensus and 2.9% consensus for year over year, and basically what are expecting 2.9% for inflation of last year 2023. This one here, 2.5%, to be honest, it sounds fair. It sounds fair. I'm not saying that we want to have anything crazy, you know, maybe we have like a surprise to the up or down, but I'm not looking to have anything crazy as we did have like NFB or something like this. So I would say 2.5 is a fair number, and I would say that the euro may continue to go up. Okay. I know it's like a strange, not a strange, but it's a different idea that I had, but we need to adapt ourselves into the situations. We need to be, right, I'm just going to give a little coach thing here. Let me show you. So you guys see this animal here, right? They change the color from whatever places they are, right? So if they are on a tree, like here, they turn green, right? If they are on, well, most of the photos are them on trees. So anyways, so they try to adapt themselves into the colors of the nature. And you should be doing exactly the same as a human, trying to adapt yourself on different situations you have, especially on the market. Okay, so if you encounter with, okay, that's not what I was expecting, well, so now it is what it is. So change your criteria, but never change your strategies. That's not what I'm saying. I'm just saying the worst blind is the one that don't want to see. So if the numbers are in front of you, then open your eyes and see it. Right? Don't make it. Don't be blind. Just look at it. Remember, numbers don't lie, and numbers are the first ones to get off. Okay, I'm just saying. I'm just saying. All right, continue. Oh, cool. We're gonna have GDP of Brazil. That's not gonna go great. And then Saturday, we're gonna have manufacturing PMIs for US and the ISM. That is one of the most important that institute something I forgot what it is. It's one of the most important measures for the manufacturing PMI for February. So pay attention here. We are looking, numbers don't lie, people do. That's a good one, exactly. Anyways, so just pay attention here, and that would be pretty much it for us on the economic calendar. And we do have Bostic speaking as well. But that would be it, guys. So we don't have anything too crazy, especially for RBNZ, as well as for Europe and some GDPs happening. All right. Any questions regarding the economic calendar? No? Can I move on? Okay, let's move on then. Let me close these, and these, and these. Right. I've mentioned that USD/JPY. I've mentioned so many times this already, right? Let me put this one. That's not what I want. Let me just put a line. Okay. Right. So what are we looking at right now? We're looking at USD/JPY 4-hour chart. See how, like, the market right now, it's a joke. Okay. What do I mean by that? Well, think about that. We have Kuroda saying that he wants high inflation to raise the rates. Okay, good. We just had it today. Higher inflation. Of course, it was 0.1%. Of course, it was 0.1% higher. That's a joke, but anyways. And the market was like, "Oh yeah. Let's just start shorting it." I mean, calm down, calm down. Look at that. You know, like, we just at the intervention point, and again, we are consolidating. Okay, we are consolidating. If you pay attention, we are consolidating. It's not like the beautiful ever consolidation, but there is, there is a consolidation here. Now, I was talking to Peter Pan. I don't know if you guys, probably you guys know him. Of course, you guys know. I've been doing a podcast with him, so if you haven't watched yet, go take your time and watch it, because it's a very nice podcast. Where is it? This one. And we've talked about Japan as well. And Peter is a very, very good trader. All right. He's a CFA level 3. I was just thinking he is a CFA level 3. So very cool conversation there. And we've just breaked through the 150 level. What are we looking for now? Well, if, even though the CPI haven't had any huge impact, like bringing down some of those levels, we may have 155 as a target. Because when we had the first intervention at 145, let me show to you guys, 145, I don't know if I'm going to have sufficient data to that. 145, that was here, right? No, 145, yeah, somewhere here, I think, the first intervention. Yeah, 135, yeah, exactly. So that was the intervention, and then it came back to 150. So what are we looking is, basically, if it broke through the 145, that was the first intervention, and went up I think, yeah, 5,000 pips, then we're expecting sort of similarities to this this area here as well, because if we broke through, the only thing that we need to take care is with those highs that they are exactly the same orders. Okay, exactly the same price. So that is a huge point that we need to pay attention. But for now, yes, the market will do a decline. You know, the market will come lower, probably toward these areas here, and will continue to go up. All right. This is my take on what we are expecting from USD JPY. Now, moving ahead, let's go to gold. I've mentioned about gold. You know, it went all the way exactly as I was expecting, but it didn't went on my target. That was this mainly one here. And why is that? Well, primarily because the US dollar have been very weak in the last couple weeks since February 14. Okay, so there is pretty much 2 weeks of bad US dollar, and all of the other currencies on the G10, they are taking advantages of this bad US dollar to get through a pullback. Okay, so when we look to, let's say, euro dollar, it is going up. When we look to gbpusd, it is going up. NZD-USD, it is going up as well. And again, why? Because the US dollar have been declining. So what does that makes me think? It's not the actual base currency that is strong, and it's this, well, basically the US dollar that it's stronger enough to lead where the market's going to go. So we still have this strength of US dollar on the market, but it's pretty interesting. I want to show soon the commitments of traders. I've mentioned, I've showed you. I think I haven't showed you last week. I can't remember, but anyways, we are having pretty interesting numbers there. Right? I'm gonna go through in a second. But coming back to gold, with that said, right? If we look to the 4-hour chart, we are sort of in a range right now, okay? Because we didn't break through those lows. So what that makes me think, okay, that looks like a range. So if we look like something like this, we may have this little bit here to go. Okay, so just on a very technical perspective, very technical, right? Nothing too fundamental. If we break those highs, maybe we can come to these highs here, and this is going to be my trade for the week. All right, so I'm going to be long on gold, and this is going to be my trade. I'm going to set it up right now with you guys. Where's my long position? So here, here, and here. All right, this stop can be a little bit lower. Just give me 1.8. Yeah, cool. Let me look to the 1 hour. Yeah, it does look decent. It does look decent. So that's pretty much my trade for the week. All right, long gold. Now, we did have a very strong uptrend. As we can see, we are breaking. Where's my pen? There you go. We are breaking highs. So we've broke this, and then this one, and then this one went up, and then we broke this one. So we came to a pullback, and now probably we are going to a continuation to break this top, and from that top we may have another pullback somewhere here. All right, so but I guess if we break this top here, we may have a, yeah, because it's pretty close to the area I'm looking at, to this box here. Where is the pen again? Here, to this box here. So we may have a shoot up to there. Okay, so that's pretty much my idea for the week. I know there's a long time I don't trade gold, so that's pretty much what I'm looking at. even though we do have like on a very technical perspective of point, we still have this sort of a downtrend here. Okay, 1, 2, and then the third, and then came back here, liquidate those players, and now continuation up. So that's a fair point, I would say. 1.8%, that's okay. All right. Now, remember I've mentioned for you guys WTY, that would be getting through these levels. Well, we did have these levels reached right now. Most probably we will continue to decline now, okay? But again, we are getting a consolidation. So even though we have a series of news ahead of this week, some of the pairs are not moving because of those news. They're moving because of geopolitical tensions, as well as all the major events that are happening around the globe. Okay, so I just want to make sure, again, everything that I say is not an investment advice. It's just my own solely positions, okay? And I just like to share with you guys. Now, what else? Euro dollar. Euro dollar, again, it went halfway that I thought it would be coming, but it didn't went another half, all right? So let's take this as a not good trade because I didn't predict the whole move, so that's all right. But indeed, we are making high highs. So we are trading higher than low before. So here, this is going to be our top. We are consolidating here. That makes me think that maybe we can continue to go up. But for now, I don't have too much certainty on here. I would prefer to wait until the CPI data for the euro to come out on Friday. Where is this? Here. And then, yes, I would see what I would be doing for next week on euro dollar. Okay. But for now, we are moving pretty consistent on what we've moved last year, right? Where is this? I think it was somewhere like here. Oopsie, sorry, like here. Okay, we came down here, and then we came down, and then we start to going up, and then we had those huge moves up. Okay, so not saying that this will actually happen here again, but remember my whole bias of euro dollar for this year is long, even though we're not having too much good data for euro. All right, is that clear? I hope it is. Let me drink some water here, guys, just a second. Speaking does take a lot of my throat. So GBP USD. Okay. I had an analysis ready to post today, but unfortunately it didn't go through. Okay. Why? I don't have a clue. I was talking to the devs. I want to send those analyses for you guys, and unfortunately it didn't go through. But anyways, so my bias for the pound is long. Okay, it is long. I still have this position open. My profits, my stop loss are on my entry points. We did have this move down. That was very good. We took 50% off. That's fantastic. You know, we made like, I think was 0.7% on this position. So that's fantastic good. All right. Remember, guys, it's not about how much money you make. I know when you have a small account and you make $10, that it's a lot of a percentage, but focus always on percentage. All right. And always like reinvest your money, continue to reinvest your money. What I mean by that is simply start with a budget, all right? Like if you have a 100, 200, 5,000, whatever. And then every month you increment a little bit more into that, because then you can have a compounding effect through the year, through years. All right. So just make sure that you're always following the risk management. And again, pay yourself. As I always say, pay yourself, take a bit of profits for you, go at lunch, go out in a nice place, and have these conversations with intelligent people, smart people. Because if you are the smartest in the room, then move on. That's not good. No, no good. Go to other places. You need to be the dumbest on the room. Okay. Why? Because you're gonna have to learn from all this to be someone. So just remember that we're never the good enough. If you think you're good enough, sorry, you're really not good then. Okay. So just make sure to always be paying attention to those little things of life. Again, so I do have a long perspective for this week on the pound dollar, even though we do have some indicatives of strong US dollar, but I'm pretty confident of a branch of this little trend line here that we may have and go up to those to those levels here. Okay, okay. So just pay attention on gbpusd because we did had better PMIs, we did had better retail sales, we did had good CPIs numbers. So pay attention. It is very good opportunity. It's a very good opportunity there. Right. What else? I've talked about euro dollar, USD JPY, pound dollar. What would you guys want me to have a look? Because I know you guys always want me to have a look on something. Send me through what you want me to have a look. No, you guys don't have anything. Aussie dollar. Yeah, I can have a look on that. Okay, let's have a look on Aussie dollar then. NZUST. Okay. Right, Aussie dollar. Again, I see potential for an continuation of an uptrend here. Okay, as I've mentioned on my analysis, but in the long term, I'm looking at those levels here: 64, 63, 500. Okay. Yeah, we may have, some up moves, but in the long run, I'm looking at a downtrend. So if you feel like capitalizing on the short term for long positions, it is a good way for you. That's perfect. If it fits your strategy, that's even better. In my sense, I would be looking to wait for better positioning on these longs to get short. All right. Just because I've mentioned, even though we did had a better CPI, better GDPs for Australia, retail sales for Australia, consumer confidence for Australia, Australia it's in a very tricky situation right now because especially against the US dollar. And talking about rate cuts is from US. I've just made a research today. I think it's live already. Let me have a look. Market analysis. Yep, that's the one. So, oh, that's not the image. It should be here, but anyways, sorry. Anyways, here the US rate market has adjusted expectations, anticipating later and less substantial rate cuts by the Fed through the year. The first expected rate cut has been pushed back to June, as I've just mentioned on last Tuesday. aligning more closely with the Fed's on plan for the 3 cuts by the end of the year. So that's 3, that's not 10, all right? So if, all right, this is my game plan. Once we have a starting to cut from the US, from the FOMC, sorry, from the Fed, we may have stronger currencies like Euro, Pound, and Aussie and Kiwi. Okay, those 4 would be good. And if the BOJ actually comes in and hike interest rates, then it would be a very nice short USD JPY. Okay, because this is what the market is expecting. All right, it's waiting for. Sorry. New Zealand dollar. Same thing with New Zealand dollar. I've mentioned, it came to retrace to this moving average. There is a nice long opportunity here until the levels of 62,400. Okay, so mostly probably long on New Zealand dollar. Now, before we finish, I want to show you all. Let me just stop share my screen to make my login here. The commitments of traders. Okay. Let me share my screen again. Okay, cool. Right, commitments of traders. So let's have a look on the numbers. Okay. See, that's interesting. That what I was mentioning for you guys. The US dollar have a negative 33% net percentage. That means that they have 29%, 29 position long, that they had 35. They've added those 5 positions to short, and they closed, of course, some positions on long, 6 positions on long. Okay. So interesting, because we came from very high numbers of long and now very not high numbers of short positions. But indeed, we are net percentage negative. Okay. Canadian dollar, nothing changes too much. All right, 14%, 14 long, and then they closed seven positions on short. Now, talking about JPY. JPY haven't had a crazy move for quite a while, right? So quite beginning of this year, let's call it, okay? Because there was like negative 31 and negative 22, and they're decreasing, and now they're probably going to starting to build even more. But look at that, it's just like out of balance. It's like 42 positions short and only 26 position long. So that's like, whoa, it's way high, okay? Way high. So I'm not even bordering to long USD, to long JPY. So most likely to short JPY at this point, okay? New Zealand dollar, 19.5% positive, 21 long, 18 short positions. And that's exactly what I was mentioning, like looks like for good long position. CHF, 0.4, right, from 5.2 to 0.4, pretty standard, nothing changing. 1.4, 45 long positions, 42 for euro. Okay, so very similar. So quite of break evens here. Not much to do. GBP, sorry, 23 long, 24 shorts, 14.9 came from 17.9. All right, so not much difference on the positions as well. So that's the COT for this week, from last week to this week, because the COT is released only once a week. Do you guys have any questions? No questions? I think this is it for today then, guys. Thanks for everyone that came in. stay tuned, because I will publish my full idea of the pound on the Telegram channel most likely tomorrow, because they need to fix it first. It's not working for me. I don't know why. I've received a message today after I got off on the office telling me that it was fixed. So I will have a look, and then I will send it to you guys. If you have any problems, please let me know, and I will try to sort it out for you. And please watch those videos on YouTube that I've mentioned for you guys, and I see you on Thursday. Thanks for everyone. Have a good week ahead. See you.